Hello, everybody. Welcome back to another DeFIRE AMA. It is Saturday, August the 6th. I am back with an update on the progress that we have made this week on the MVP. Uh, Also, welcome back to um, some folks that have joined us that are going to be helping us out as we ramp back up for our next round of sales and to help us as we see some more people coming into the Discord server. We're going to have a couple of people we've been talking to, as well as some of the folks that had been helping us out earlier on in the beginning of the summer. Um, and looking forward to working with more of our contributors as we ramp back up as the MVP finally gets through the development phase. So let's get right into progress on the MVP. So there's mostly been work being done on the back end for the last couple of weeks. Um, that's just been contracts. So there was, every single container has its own set of protocols that's interacting with, even though the contract or the container structure may be one of four or five different basic architectures. Every protocol has its own code architecture that we have to interact with as we build our code. Um, and so we've been working with the development team to make decisions about what's going to be most efficient, how swapping will work in and out of assets, challenges of particular protocols in terms of whether the tokens we're trying to interact with have price oracles through Chainlink, what the security level is on our end, on their ends. And then for containers where there's intricate movements happening, such as with the stop loss container, where we're swapping in and out of assets on the back end, um, just how all of that works. Had to go through some trial and error trying to figure out what the safest way of routing tokens through different protocols is, which we think we now have um, figured out for the majority of the containers that will be in the MVP. I would say we're about 50% through the coding at this point, or the engineers are. And then there's probably about a week or two left of coding. Uh, Probably by the end of next week will be most of the way there, but there could be just a few things to tie up there. We've also got code finished for the blocked version of our ecosystem token, so the DeFIRE token. So the V tokenomics has been um, taken from just what's on paper and finalized in terms of how the contract code will interact, how people will be able to use it. And then that leads us to what has become the focus of this last week, which is transitioning into the front end development. And there's already been a lot of work done on the conceptual design, especially the UI, the user interface. That's been basically figured out for a while now. Now we're looking at it in terms of, okay, well, what did we change about our architecture in the process of building the containers for the MVP and thinking about which kind of B token contract we decided on and how that might change some of the buttons, some of the features that are on different pages of the Blazed app. So that does affect not just the visual design, but also the user experience and how the front end code and the back end code are tied, um, where things are placed on the screen, what how we're configuring the text that's going to be shown on the um, details pages for each container. There's a bunch of different plugin type of API plugins for charts, graphs, different numbers that are going to be pulled from um, other places, for token prices and such. That all has to be uh, thought about, there's multiple places that could be pulled from. What's the most efficient way of doing it? There are different people that offer analytics for charts and graphs, and just deciding what we want that to look like, how it's going to work for the end user. There's just choices to be made, right? And so we're going through that with both the people that are going to be tweaking the visual design and also the people that, excuse me, that are going to be working on just the building the front end code. And they also had questions about, how the container contracts, so the back end coding uh, functions. So just lots and lots of text interaction, lots of longer meetings this week with the development folks, engineers, designers, and then the team on how that's all going to interact. So we made a lot of progress there. We've got some results by the end of the week. So now we're going over some of the initial drafting between the design and um, how it had to incorporate some of the back end code choices. Um, so that's hard to paint a picture through words, but it was a lot of work. It's looking good. There's still quite a few choices to be made. Not so much now around the container page, so where the user is going to be able to choose between different containers and deposit and withdraw and everything. But now back to the details of what kinds of analytical data is going to be showing up in the detailed interface for each container, also for the staking and locking kind of functions for the DeFIRE token. There's a page, that'll be just for governance and the locking and boosting aspect of the DeFi token. Um, there's still some things that are in motion for the back end code, which is affecting, how we move forward with the front end meetings. So still a couple of days of fairly dynamic work that's interdependent between a couple of different players on the engineering team. But we're plowing through it. We're making good progress. We're very encouraged by how everything's looking. Um, there's still quite a bit of work to be done to make sure that everything is tied up really well. And then there's also been a lot of work in the all through this process and looking at things from a usability standpoint, from a security standpoint. Um, so uh, hard to quantify, how long that took and why it took so long, but it did actually take quite a bit of work to get through all these decisions. Um, and I think by the end of next week we should have most of the back end contracts done. There'll be some testing on them still. Um, all the decisions around the architecture for the containers has been discussed and is basically just now the final steps of making sure that the backend engineers have uh, actually carried out the code in a way that fulfills the vision that we had, which they've done a great job. Really looking forward to sharing that with you guys. Um, so there's several different kinds of containers as well. So each one of those was sort of a different phase in the development. That was talked about in a AMA quite a while ago, where I discussed that there are containers that are passive, which are more like the typical liquidity farming, where you build a token pair like USDC or Matic and some other protocol token. Um, and then, there's an APR. So you stake that into it could be a farm for a DEX or an automatic market making protocol, and then you receive those emission rewards over time. That is a little bit, excuse me, that's a little bit more basic than what we'll be doing with any of the containers for Blaze, because we're trying to offer new functionality that simplifies and uh, makes more efficient the process of trying to extract value uh, by by farming or mining these different assets. Um, so the passive ones would be more like a multi-strategy kind of a container. So there won't be a lot of those, but the ones that there are going to be based off of assets that are very highly sought. Obviously, right now in the sideways market, um, stablecoin containers are sought after for the best balance of security and return, um, and liquidity, the ability to get in and out of the position. So we've been working on creating something that's going to be um, competitive with other really nice multi-strategy containers out there or vaults. Um, so that's the just the basic style of container, right? And for most protocols, that's actually like um, kind of the bread and butter, right? Um, so then from there, we get into a little bit more complexity. So then there's um, the one that I think will be kind of like our our market leader because there's no real competitor anywhere in the crypto market, which is it's a hybrid container, which means that it has both an active and a passive component to it, and that's this has a stop loss function, and it has both a risk on and a risk off um, strategy mode. So in a upward moving market, the container when you deposit your um, your assets go into the risk on strategy, and if there's a big drop in the market, then those tokens that the assets that we were targeting, you sell out. The stop loss trigger sells out of that position. It goes back into a middleman position, which is just stable coin, which is then redirected into a strategy where a protocol is offering APR on stable coins. Um, and for different containers, that could be different stable coins. Um, for the most part, we focus on the coins that have the highest uh, level of kind of trust. Kind of There's a consensus around them, like USDC, DAI, things like that. There will also be the opportunity in certain containers to farm out tokens that are specific to the Polygon network, like MAI. Obviously, MAI has higher APRs. They're trying to build or pull in more liquidity to increase their TVL. Um, and that's something that's only available on Polygon network. So for our strategies that are based on Polygon, where appropriate, we'll be offering that higher yield through token pairs that may be part MAI, part USDC, part DAI, other tokens. And so there's a slight trade-off there in that MAI is collateralized in a different way than USDC or DAI. Um, there's not been any real security issues or anything. It's just less tested. It's newer. So as we had originally outlined in our plan for the DeFIRE ecosystem, there's varying levels of yield opportunities and risk opportunities. So that will also be available in the variety of the MVP. Um, so that's the stop loss container, and then there's also the delta neutral container. So um, people who have been in DeFi for a while may recognize the idea of delta neutral or market neutral strategies. That means that part of your assets, part of the amount that you deposit, will be put into buying a token in what's called a long market strategy, right? So you believe that the token price is going to appreciate, it's going to go up. and you're going to hold on to that and allow that value to accrue. Well, in a sideways market, you may not be sure whether it's going to go up or down. You are betting on that they'll probably do a little bit of both, and so you can mitigate any impermanent loss or um, continue to gain APR rewards by taking a market neutral approach where you're also being rewarded for partially staking on what's called the short position. So when you short a token, you believe that the token price is going to go down. So you actually, for a strategy like the market neutral container, you will be depositing part of your value into a lending protocol, then borrowing the target asset and selling it for more stable coins. So you will have a position borrowed in a lending protocol, right, with your assets. So part of your deposit is in a long position. Part of it's in this short position where you've lent and borrowed and sold off the target asset. So let's say that we're on the Polygon network. Let's say that the target asset is Matic or wrapped Matic. So you deposited USDC into the container deposits the USDC into the lending protocol and borrows against that for Matic, and then sells the Matic and holds on to USDC. So if the price of Matic goes down, then the amount that is owed will go down. So then you can pay off your position before getting into a problem where you are under collateralized, and so the container manages that process, and then as the token price goes down, any value that you hold in USDC that is beyond the value of what the wrapped Matic you borrowed is then kept as profit. So you can gain on the way down and on the way up for a token's price. And that's the whole idea that you'll gain if it goes down a little bit, but maybe not as much as if you uh, had all of your value held in USDC. But you can also gain in the case that it goes up as well. In that case, you might have thought that you needed to be in USDC, but actually you could have made more money holding the token. So you're doing a little bit of both. And in addition to making a little bit less because you're holding both, you're holding the token and you've sold out of the token position at the same time in equal measure, you still have some sort of a APR rewards emission coming to you just for being in the container. So you make uh, you make returns either way. So it's a great way in a market where there's uncertainty about the conviction of whether the price is going to go up or down to continue to make gains. So that's a great thing to have right now. And it'll still be a great thing to have when we finally launch the MVP. And it's just a good thing to have in your toolbox because those situations happen periodically throughout the year with crypto on any given asset. Um, so that's the third uh, container style. Then there's also um, so let's see the fully active style. So we said passive, hybrid, which would be the stop loss, delta neutral, and then there's the active version. So in the active version, that will be primarily the gamified version, which will not be part of the MVP. But that would mean that there's a container manager. So someone who's a professional trader who wants to be a part of having a custom container built that then people can invest in will be selling in and out of tokens, and they'll be making the decisions. So it's not just code deciding decisions. They may, work with the team to create a strategy where there is code where they are just depositing into a particular protocol, and then the code is auto compounding. So it's partially automated, but for the most part, they are free to move in and out of positions on different protocols. And so it's very hard to get the maximum extractable value on any particular asset if it's going to be purely coded. And there's trade-offs there, right? On the one side, you've got a permissionless, um, decentralized form of investing when it's fully passive because everything's coded and no one has any control over where the assets are going. You're completely controlling that. And then on the other side, for people who have less conviction on an asset or feel less comfortable with their expertise in trading and making the best return, you can, rather than just copying somebody else that you see on Twitter, you can actually use a container that they developed themselves. And these are not just going to be available to anybody. There'll have to be some sort of a um, track record of success. And then also, as these containers come online, as more and more people vie for um, the reputation of having the best returns on any particular kind of asset, then they will, kind of win out on the market by gaining more of the TVL from the investors who are part of the DeFIRE ecosystem and farming that particular um, container. So it's a way for capitalism to kind of be at work within the protocol itself. Whoever opens a container position and manages it gets a management fee, so it works out for them. It works out for everybody else in the ecosystem as a way that the protocol itself can continue to provide more value over time. Um, and then the final version, but not necessarily the last to be developed, would be a index style token where there's a pool of eight or more different tokens. Um, there are starting to be more and more wrapped tokens that represent an entire index, but you only have to buy the token themselves. And just in the last month or two, there's been pools on Balancer on Polygon of some of these tokens from Index Co-op. So it's now possible to do a tokenized delta neutral position on Bitcoin or a combination of Bitcoin, Ethereum, and Matic. It's going to create some really interesting possibilities this year for building um, not just index pools, but index pools that can perform regardless of the market. And so I think we're going to use Balancer for that. And that technology, we're also going to use just the classic way of doing delta neutral by using a lending protocol. And so that'll probably utilize Aave, which is another partner that we recently granted. Hey, how are you? Channel 166. I'm looking at channel 25. Um, Good to see you. How are you today? I'm not really sure if that was, I couldn't make out what they were saying, but hopefully get a chance to chat with them in a minute. So that was, yeah, that's the fifth and probably for now that'll be the final different style of container that we have, and that container will be um, probably one of the more utilized container styles as we build out, plus the stop loss function because that's something that really doesn't exist in DeFi anywhere. Um, yeah, so that has all been coded, or the structure has now been coded, and we know how we are building those. So we'll be able to use a control tower within the backend code to add new ones on a regular basis. So the MVP has taken a while to put together. It's fairly complex, and the auditing is going to be necessary on the front end, which there was the thought of doing beta testing with a portion of the MVP prior to auditing, but it looks like we're going to need to go straight into auditing, um, which has trade-offs. On the one side, it's longer until people who are invested will be able to utilize their DeFi tokens. It also means that on a security standpoint, we'll have that much more confidence in the product and our ability to provide security to our investors. So it's a necessary thing to do. We're still focusing on doing that as quickly as we can. So we're moving at the fastest possible speed. Phoenix Firefly and myself are interacting on a daily basis with the engineering team, um, and so I think part of what's hard to communicate is that we're actually moving really fast for what this is. There's a lot of DeFi protocols that are forked that come out within a couple of weeks of having started. There's also some teams that go through the process of working with a VC firm. Occasionally, those can be rolled out in a couple of months, but a lot of times the VCs want to move through a process where they don't go with investment by retail investors as seed round contributors. So we've gone the opposite way. Primarily, we have focused on just the average investor because we think that's going to be our customer base, and we have gone also to asking foundations for grants, which there's no need to sell tokens that way. So we've been trying to maintain the value that we can offer to our early investors, while figuring out how we can use the liquidity that we have available to ramp up as quickly as possible. So I do recognize that people in this community who have already invested have been very patient. We really appreciate your support. We recognize that your funds have there's many options for ways to make a return, and we do believe that the faith that people have put into us is going to be well rewarded. I've actually done an analysis on the projected return on the stop loss containers, and I do think that when we're able to release that data, it's going to really excite investors to know the potential gains above and beyond whatever the price action is for things like Bitcoin and Ethereum, especially, which, even though we're currently in a sideways market, will definitely have a lot of upside potential uh, when we are at the point of launching the MVP. I can expect some sort of interesting price action with the Ethereum merge, and who knows if that will continue on for an entire cycle or if that will just be a short-lived pump. But the thing about the containers is that they capture alpha, which means they capture upward price momentum. So um, when you get to the top of a pump, uh, then the stop loss trigger is there to sell out of the position before the market goes back down to the full correction of whatever that parabolic run of price action was. So over time, the data that I compiled for a year's worth of sort of an annualized return on Bitcoin, Ethereum, and Matic uh, showed that you can capture quite a bit of return in medium and short, or a medium and long range time frames. So anybody who invests in that strategy um, will be able to benefit just from the price action of the token over time, um, by capturing the highs and selling out of the position before it goes back down to the lows. And above and beyond that, if there's higher APRs that happen because people flood back into the market and TVL goes up, which allows protocols to offer higher returns, then that's just icing on the cake. So I think it's a really interesting way of having a long position that is only available if you're comfortable using certain technologies like stop loss settings by using trading bots and things like that. But it's never really been available on a protocol level for people to buy into. And so, regardless of whether you are a long-time trader, you're a crypto native, or whether it's someone who's just coming into the ecosystem, it's a container that's going to have um, that balance of security and exposure to yield, without having to worry about checking the price every day, making sure that you're available most hours of the day to sell out of your investment, because it's so volatile. Ethereum is going to be incredibly volatile. Bitcoin is going to be less volatile, but still, crypto is incredibly volatile in general. And so to be able to use these tools to look at the quantifiable data around the average volatility of any of those tokens, and to set a sellout of the token based on the average that it swings up or down in price over the course of a given period of time. It, you know, Someone can always beat that if they're a professional trader and they use lots of different analytical tools. But for most people, it's still going to be beneficial because no one is awake 24 hours of the day, right? So not even professional traders, and they may be able to set bots that can help them, but market conditions change, um, and so squeezing that little extra bit of alpha out of the buy and sell strategy by a professional is going to be diminishing returns compared to what you can use quantitative data to set on a more basic level. So I think this container will have value even for people who are very well versed in crypto, and I'm really excited to see how it all plays out. I think that it'll just be really fun to see people who try it out who do feel confident in their own abilities, and see if it doesn't provide them with value as well. I really think it will. So that is the majority of what's been going on with the development. Obviously, there's a lot of uh, thought that goes behind all of these decisions. Um, just to reiterate, please know that we are very aware that people want to know that that their funds are being used with urgency and diligence, and concern about providing a quality product. Um, Phoenix Firefly and I are constantly pushing each other to try to deliver more and faster returns. It's been a grueling process, as any startup is, but it's also incredibly exciting. We couldn't do it without you guys. So thank you for listening. Thank you for supporting us. And we'll be back later this week with an update from Firefly. And hopefully everyone's having a great weekend, and we'll see you in the next one.